Do not, I repeat, do not start trading until you learn this formula forwards and backwards. What's up, everybody? Welcome to the channel. In today's video, I'm going to be going over a very, very important lesson about how to stay a consistently profitable trader using this one simple formula. And I see everybody doing it wrong, and I want to explain why leverage is completely irrelevant when it comes to managing your risk, and why this formula will help you to determine how much leverage you need for your trade. If you're new to the channel and you like my content, all you got to do is hit that subscribe button. And then tick that little notification bell, and that'll make sure that you get each one of my videos when I release them each day. Now, there's a lot to unpack what's going on with Bitcoin right now. There's a lot of price action issues. There's a lot of stuff going on with Binance. There's some potential announcements going on. So I'm going to dive into all of that information, and I will be covering this secret formula for you guys. If you are new to the channel, every week we do a giveaway, and today is the giveaway for the 21-day Trading Foundation Masterclass. It's 21 days of risk management, trade psychology, introduction to technical analysis, how to time your entries, exits, all that stuff. And that's at cryptotradingchallenge.com. All you have to do is like the video, leave a comment below, and you'll be automatically entered to win that Trading Foundation Masterclass. Without further ado, let's jump right in and let's see what the hell is going on with Bitcoin. Okay, so right now we clearly on the daily are in a downtrend. Okay, in a downtrend, had a nice little bounce. On the last video, a lot of people were talking how bullish this was, how we're going to break out. We've got this inverse. This is a classic bear flag. That's what I was seeing it as. And we had this bearish order block up here. I was hoping for a little bit higher at 7,900. We ended up getting to 7,850. So I actually did not get short at that level, but so we had this nice breakdown, come up, retest, nice little bearish retest, top of the channel. We actually didn't make it to the top of the channel, and I'll explain why that's actually also bearish. So you've got this nice trend line at the top, but when you see this come up and you don't make it to the top of the channel, and you also had this nice little inverted head and shoulders here, and you had the breakout, the neckline test, and then a push up, the measured move was actually up to here, 8,200. But we actually didn't make it to the 8,200 level. And what that means is that this is an underperforming inverse head and shoulders. It means we failed to reach our target. We actually got about halfway there out of the 12% measured move from the peak to the neckline. So this was a very big sign that bears were still in control, that bulls did not have that much strength. And what we also saw was we couldn't even get to the top range of the channel. So that means that supply was very strong at this 7,800 level. So bears are very, very much in control. But we are seeing some stuff going on right now with the bulls that's pretty interesting. So we broke out of this channel. We had a nice retest, nice little short opportunity there. Only gave us a little 2% move. And now we're consolidating. And the question is, are we in, maybe a potential diamond bottom before we go straight up, or are we bear flagging to the downside? Okay, so let's zoom into the hourly. Let's take a look at what's going on here. So we've got a couple things. So we've got this downtrend channel. Okay, all right. So we've got this downtrend channel. So we're waiting for a breakout here, but we've also got a nice solid supply block here. This is a bearish order block, and it comes all the way back over here even. I mean, we can just go from right there. So we've got this nice bearish order block. So 7,400 is a level that we definitely need to get above to feel really bullish, to aim for these higher targets, okay? As we look at the candle structures, most of the larger candles are red, and you can switch to Fibonacci and see that a little bit easier, but you can see the strength and the size of the candles. Very, very little trend, and they bring it back stronger to the bull side. You can even see the wicks, very indecisive action right now. So we're not really bullish, not really bearish. We've got this consolidation pattern, kind of waiting to see what happens before we break up or we break down, okay? So my money right now is actually, I was very bearish. Okay, I have a short hedge running from 7,800 up here, which I talked about in my last video, and I also mentioned in my free Telegram channel if you're not a part of that. But this is a potential diamond reversal before we move to the top side. But a couple things I want to go over here. So let's talk about the funding again. So neobutane. All right, so let's bring that up. So again, prolonged negative funding here. I'm going to change the color theme here for just a second, but prolonged negative funding for an extended period of time. Okay, so that spells, typically a nice little short pump. Now this one, prolonged negative funding for 28 days. We're going on 11 days now of prolonged negative funding. So we are setting up for a short squeeze. The question is, do they want to take it down first? Okay, so let me switch back to Japanese candlesticks, and let me switch back to the nice white theme here. Sorry for the blinders. Okay, we had that nice bull div here. We broke down here, possible descending triangle, or maybe even a wedge on the RSI, looking to break out here. So potential breakout would take us up to about 7,600 if we can clear that 7,400 level. And I say 7,600 because I want to see what happens when we test this channel again. We broke down from it. We tested it once, got rejected. So I could see us, moving back up maybe 5% to 7,600, and then that may be a very good short opportunity. But I am very nervous about a candle kind of like this one, this 40% candle. Once, if you can get on a candle like that, you can make a lot of money very quickly with minimal risk. But we want to see that negative funding. And what trapped them before was this bear trap. Okay, we broke down, and that's what I'm looking for right now. And I do want to show you something really quick. I want to show you this order book on Binance right now. It's pretty crazy. So when we come down and we take a look at the where are we at, 7250 levels, look at the massive bids that are going on here. We've got 110 Bitcoin to 7253, and we've got these bids, just massive buy wall all the way down. 123 Bitcoin at 7260. So if you're playing with the whales, you want to be on the buy side, because it looks like someone, maybe a big institution or something, is protecting their long position. They don't want to get liquidated, right? So they've got this massive Bitcoin buy wall to keep the price from dropping below. Maybe they're in a big long position from here, and it dropped down and they got a little bit nervous, so they set this massive buy wall to kind of prop the price up and keep it from dropping further. So my guess is that we'll probably break out of this channel, test 7,400, possibly even up to 7,645. It's not a great trade because strength does show to the bears right now. It's in a downward correction, but that's what I would be looking at is kind of like the near term. Okay, now let's look at the weekly. The weekly did close, and we're gonna remove all this stuff again just to get rid of it for ourselves. So here's our weekly resistance. Okay, very, very strong level, 7,400, and here is our weekly support. Okay, it is possible that we come back down and test this 6,800 level before we move it back up, right? If we can get above this 7,400 level, that would be very bullish. And we could even have a run back up to this top side. But right now, lots of weekly resistance at 7,400, and the monthly looks absolutely terrible. 1, 2, 3, 4, 5 out of 6 black months. This was a bullish engulfing candle to the downside. We're opening below the monthly. So this 7,400 level is both a weekly resistance and monthly resistance. So very, very key level to crack that again to stay bullish. Otherwise, I mean, we could definitely continue to head to the downside. We've got our Fibonacci levels right here. Currently holding the 61.8 to the money, to the tick. Around 7,300, and our next supports are all the way down here. I mean, we could see this thing come all the way down to 5,500 if we're not careful. I mean, this is a very real possibility. It's a 78.6 drop from the top, and it's also this previous monthly resistance here, which turned into monthly support. So, and look at over here, very, very key level, 5,500. So if I was a betting man, that's where I would be betting that the whales want to take this, but they might take it up before they take it down. And I know that's not super helpful, but right now, price action is very indecisive, very, very indecisive. It was Thanksgiving, holiday weekend. So just something to watch out for on that. Okay. Now, let's talk about this again. So let me pull this up again. Okay, so the secret formula that you want to watch out for, that you want to master before you trade. Don't trade until you master this, okay? What this is, and I'm gonna kind of clear. I think there's a whiteboard that I can use here. Whiteboard. Let's see. Virtual whiteboard. And I'll go through this with you guys because I really want you to kind of get this down right here. Start drawing. Okay. So the formula that you want to use, okay, is when someone says risk 1%, let me share my screen. When someone says only risk 1% of your capital on each trade, this does not mean that you only put 1% of your capital in the trade, okay? That does not mean that. What that means is that if your stop loss triggers, the total amount of money that you're going to lose is 1% of your portfolio. So let's walk through this. So $10,000 portfolio. If you have a 1% risk, okay, then that means you're going to risk $100 on a trade. Now what that means is that once your stop loss hits, that's how much you lose, and you lost 1%, so you're down to 9,900. Okay, so you lost 1% of your capital, and you can lose 100 trades in a row before you hit zero. Okay, now the formula that you want to know for every single trade you take is very, very easy and very, very simple. Okay, so let's erase all this again. Let's see. Let's do a really giant eraser. Okay, so the formula you want to know and that you want to master. And I'm monitoring a trade right now, so I apologize if I'm a little bit. Okay, so the formula is very, very simple. It is risk, amount, stop loss. Okay? So let's see if we can make these bigger. Risk amount, let's see. Oh, you know, I can just zoom in. There we go. All right, cool. So risk amount divided by stop loss. Now, what does that mean? Now, if you remember what I said before, $10,000 portfolio. This isn't going that well, but it's anyway. $10,000 portfolio, okay? You want to risk 1%. So your risk amount equals $100. Stop loss equals entry minus stop loss level divided by entry. This is for longs, okay? And I'll show you how to do shorts too. All right, let's take a look at that. Let's take a look here. Okay, now what the hell do I mean by all this? You have to know this because this is very, very important. If you take this long position trade, okay, and let's say you're going to go from here, and let's say this is a swing trade, so your stop loss is 12%. That's okay, right? 12.7%. And let's say you're targeting the top of the range, 29%. That's a good trade. It's a valid trade. If you think this is a W reversal structure, you're putting your stop loss below the swing low candle, and you're targeting top of the range. You're like, a lot of people think, wow, 12% stop loss, that's too much. Well, here's why your stop loss is completely irrelevant. Okay, it's not completely irrelevant, but when people say I got stopped out for 20%, you have to understand that this is the most important thing right here. Risk amount divided by stop loss is the most important thing, because what this equals is equals position size. Okay, so this is how you manage your risk, and this is how you stay a profitable trader. So we've got this trade right here. So I'm going to do this calculation with you. Even if we go to 14%, we've still got a 2-to-1 win ratio. Okay, so risk amount on a $10,000 portfolio is $100. Okay, We're going to divide that by our stop loss, which is going to be 0.14. 14%, move the decimal over twice, and that gives us $714. Okay, so risk amount equals 714, or sorry, position size equals $714. Stop loss equals 0.14. And risk amount equals $100. Portfolio equals $10,000. Okay. This is not sexy. It's not boring, but this is how you become a profitable trader, and this is how you can margin trade successfully. All right. So you take your $10,000. How much do I want to risk? 1% capital. Now, when can you risk more than 1%? Most professional traders will risk 1%, but you can risk more when you have a proven track record of a strong win-loss ratio. If you're winning at 75 to 80%, sure, you can bump your capital risk up to 2.5%, okay? But that means that if you do go on a losing streak, you're going to lose your portfolio capital very, very quickly. The key is win big, lose small here, okay? So the formula, I'm going to write it down one more time, is risk amount, stop loss equals position size. All right. Boom. All right. So this is the key. This is the key to trading. This made me go from a losing trader to a winning trader. Okay. So every trade you take, figure out how much you want to risk. Just take 1% of your total portfolio balance and then divide that by your stop loss. Okay. And then that'll give you your position size. So on a $10,000 portfolio, I'm going to use 7% of it, $714 on this trade. And if my trade hits my take profit target, I am going to win. Okay. 714 times 0.28. I'm going to win $200. Okay. But if the trade hits my stop loss at 14%, I'm going to lose $100. So it's a 2-to-1 risk reward ratio. Now, the question is, why the hell would I ever use leverage? For this trade, you can use 1x leverage, $700, right? Now, here's how you use leverage, okay? So let's say you want to do a scalp trade. And let's say that we are entering at 72.55 and our stop loss is at 72.25, so 0.41%. And let's say we're targeting to the top of the range, maybe here. Still a valid trade. The trade is a 4.78 risk reward, beautiful trade setup. Come back down to the bottom of this level. Top of the range, which was the previous demand zone, tested it a couple times. So still decently valid. We've got some bid structure. So let's say I'm going to go long here. My stop loss is 0.41% below the swing low of this candle. So now let's take our $10,000 or $100, and now we're going to divide that by 0.0041 because this is 0.4%. This would be 4%. This would be 40%. Okay, so our stop loss is 0.0041. Now we get 24,390. So let's go back to that same example that I was just talking about, okay? So now our let's just do a clone, okay? So now our portfolio is $10,000. Our risk amount is $100 still, but now our stop loss is 0.0041. But our position size is now, okay, so we'll do that again. 100 divided by 0.0041. Now our position size is 24,390. Well, now you're asking, well, I only have $10,000. How the hell can I get this? Now this is why leverage is completely irrelevant to managing your risk, because the leverage is just a slider, okay? So 5x, 10x, 20x, 30x, okay? So our portfolio is $10,000. Our position size is 24,369. So then if we want to get to that level, okay, if we want to get to that $24,369, then what we need to do is we basically just need to take 24,369, divide it by 5. So we basically would go 4,800 $739, or sorry, $4,873 on 5x leverage, and that gives us our 24,369. Okay. Now, if we want to go on, so 4,873. So then, if we want to go on, then we take 24,369 and we divide it by 10. 2436. 2436 times 10 equals 24369. So you can go, 5x, 10x, 25x, all those things. All of it is irrelevant unless you get to a leverage where your liquidation point is going to reach your stop loss first. Okay? So and I hope you guys are digging this. I hope you like this, because this is the secret. This is the stuff that everybody knows, and I harp on it all the time. Do not leverage trade. Do not put your funds on a leverage exchange until you know this. Until you know this, there's no point, because you're going to burn your capital. You're going to be putting 25% of your portfolio, 50%. You're going to push that little 50% button like Binance and Bybit and BitMEX. That's not what we got. We got to calculate our position size. Be calculated, okay? So 24,369 at 10x leverage. Our stop loss never changes. It's always at 0.0041. It's the same thing. So you can have a 24,369 position, and you're still only ever going to lose $100. Now, if you hit your 3%, okay, so let's zoom back into the 15-minute. If you hit your 3%, or 1.9%, okay, so we're risking 0.41%. We're looking for 1.94%. So if we, whoops, origin, don't need that. If we hit that, let's look at the daily. So if we hit our 24,369, 24,369 times 0.02, then you'll make $487 on this trade if you hit that 2% win. And so you're going to risk 100, you're going to make 487. It's a 4.8 risk reward on that trade. And that is how we manage our risk. That's the secret formula, guys. Risk amount divided by stop loss equals position size. I hope you guys understand that. I hope you guys master that. If you have any questions, leave a comment below. I'll try and answer your questions. If not, I do have a risk management guide completely free for you guys. I'll leave the link below, but I really wanted to talk on this because I see a lot of people burning their accounts, liquidating their accounts, and I don't want that to happen for you guys. So before you trade leverage, before you trade anything, master this, understand this, and then once you get this and you understand how your win-loss ratio, risk reward, and all that stuff works together, then I think you'll really, really, truly get trading. But that is it for me, guys. I covered most everything. I'm going to cover traditionals tomorrow. I can take a quick peek at them real fast. Let's see how XRP is doing. I was looking at a short earlier. Looked like shit. Came back to this previous bearish block. Let's see, traditional markets. All right, so I was hoping LYFT broke up here. I watched the market. It dumped below. I couldn't even get an entry, so I wasn't able to actually get in it even at 48.31. Mostly watching, so this trade wasn't even active. The market opened. Didn't even get to fill my order. We didn't hold this bullish block, so what I'll be watching for now is maybe an entry down here at 44.68. Like I said on my last video, this is the ideal entry. 44.68, previous resistance, previous support, previous resistance, strong demand block. You can see that right there. So 44.50, 45, probably a pretty decent entry there. Apple, I talked about taking a short here. I got filled a little bit. I really wanted this high side entry. I got filled 266.38 with some lower strikes, 250 strikes. They had the best deal on options. Uber looking like shit. I'm glad I cut it at 229. Tesla kind of holding up, kind of retesting some of those moving averages. I still have a hope that will fall down to a lower level, but you can move that stop up or you can take a little profit here. But I still have faith that we're going to break down and move to these lower levels, even with all the Cybertruck sales. Hey, that's it, guys. Appreciate you guys. Welcome to the channel. If you're new, if you want, hit that subscribe button, and I will see you guys on the next video. Appreciate you.